Inflation has fallen sharply. From its peak of 5.2% in September, inflation has already fallen halfway back to the 2% target. These remain, though, challenging times for the UK economy. Substantial headwinds are hampering our recovery and rebalancing. Today's report explains that further falls in inflation are in prospect as the effect of external factors wanes and a weak near-term growth outlook adds to the margin of slack in the economy. Nevertheless, growth is likely to recover gradually, supported by rising real incomes and the additional stimulus provided by the asset purchases announced last week. The ONS estimates that the economy contracted slightly in the final quarter of 2011, completing a year in which growth disappointed. And the figures released this morning show that the unemployment rate is now 8.4%. Although some recent business surveys suggest a brighter picture for activity at the beginning of this year, the fiscal consolidation and tight credit conditions at home and the weakness of our major overseas trading partners are acting as a drag on growth. The underlying need for repair of balance sheets means that the path of recovery is likely to be slow and uncertain. For much of this year, there is likely to be a zig-zag pattern of alternating positive and negative quarterly growth rates, reflecting the additional bank holiday for the Queen's Diamond Jubilee, so that it will be even harder than usual to interpret the official estimates of growth. We are still steering a course through choppy waters, and many people are experiencing difficult times. Many savers continue to receive negligible returns on their savings. Over 1 million more people are out of work than was the case 4 years ago, and those who are working have seen the purchasing power of their pay sharply reduced. These are the consequences of the painful adjustment prompted by the financial crisis and the need to rebalance our economy. Moving to a world of steady growth, inflation close to our 2% target, and a more normal level of interest rates will take time. There is a limit to what monetary policy can achieve when real adjustments are required. But with falling inflation and the prospect of an end to the squeeze in real incomes leading to a recovery in growth, we are moving in the right direction.